Just waiting for me to go live. Just waiting for me. There, I'm live. Nope, that's his upcoming. Just waiting for me to go. Nope, I'm live. All right. Welcome to the live stream. It's the climb to one. The worst YouTuber on YouTube who never even knows if he's live or not. Well, here we are, guys, and you see the title. Why is MSTY blowing up? What the fuck is a MicroStrategy? Well, I guess I didn't bury the lead there. Let's pull back here. So what am I talking about? Well, what I'm talking about is we bought MSTY at $31.56 average cost, 12.67 shares. And some of that was after it had already started going up, because originally we had 9 stocks, well, 10 stocks, because we did put 200 into getting the sundial option going. Right, so we were more spread out. We consolidated a bit, and because MSTY has such big fat dividends, we put more money into MSTY. As you can see, MSTY has a total market value of $531.60. We put about $400 total into MSTY. Original 100 and then another 300 on top after our sales. We see that we got an average of 31.56. And you see that it's already up to 41.87. And we're talking about this. Remember, when did I buy MSTY? Oh, notification. All right, we're looking for MSTY. Am I going to be able to find MSTY on this? So we bought another. Here's all the buys of MSTY, right? We bought it at $29.32 for a hundo, 3 shares. Your individual account is complete. You receive, boom, order to buy 3 shares of MSTY to your. Why does that say 27.70? Okay, so I guess we got more there. 3 shares. When did I do? Okay, that's all. Order by 1690 of MSTY. Yes, yeah, I don't know why it's not saying it like this. And boom, there we go. 0.6 shares, and then we did another hundo for another 2 at 35.36, and then we did another hundo at 35.47. You know, so another 5.6 shares, and this was happening on the same day. I was making decisions as I was selling off the stocks that I wanted to weed out. This is by far the biggest holder in the account. The investing button just does not work anymore. I used to could go here and then I could show y'all one nice little lump sum. All right, but as we see, we're up to 1390. We may touch 1400 today. It is crazy. As we see on the overall, since I've bought in, MSTY has gone up $132 for me. And we can see on today's return, it's gone up $37. All of this is very insane. We can see that our today's return is another whopping 7.47%, but we're not even at 1 p.m. yet. The day is not over. And the total return is 33.04%. 33.04%. Well, let's remember, when did we first buy? We first bought November 1st. Oh, guess what? It's November. That was 18 days ago. So these games are in 2 weeks' time. In 2 weeks' time. Okay. Well, what is MSTY connected to? Let me go to notifications one more time. Man, I need to be more organized. Yield Max MSTR option. So what are these guys doing? These guys are selling options on MSTR. Well, what the heck is an MSTR? MSTR is a MicroStrategy. When we got the max, they came out the gate at a pretty decent $150 valuation, and they immediately fell the fuck right off a cliff to the $19 range. And they were like, oh no, we'll pop back up to 30, which is a really good gain. But then they like weeble wobble 22, you know, and then they hit the real floor. They hit less than $1. We're talking 28 cents. Like, hey, anybody who has MicroStrategy, even if you have it from here and you took the dive, well, I want to know the people that were buying here. Who was buying this thing at sub-dollar prices? Who? Who? Give me your story. I want to hear from you, especially if you're still holding, because who anybody who bought here, anybody that bought from $30 or lower that didn't sell at 75, diamond fucking hands. And anybody that bought at 154 and said, hey, I don't care if it goes to zero, why am I going to sell this for $1? You know, when I put thousands of dollars into it because it's selling for pennies. I mean, a decent amount of pennies, 30 pennies, not like 1 penny. But you know what I'm saying? Like, when it's at this level, it's being kicked off the trading platform. And then like you didn't sell at 170? And now this thing has just gone crazy. And how? Why? What? Even today, it started at 389. This thing is up 10%, up $39 today. MicroStrategy Inc. engages in the provision of enterprise analytics and mobility software. The firm designs, develops, markets, and sells software platforms through licensing arrangement and cloud-based subscription and related services. Okay, I mean, that doesn't sound bad. That's tech related, and it's software, which usually, hardware can be a little more difficult. There's more production in the hardware, like materials. The materials you need for software is smart motherfuckers. You need your coding. You need your coders, your engineers. What you need for hardware is you need those engineers still, but now you also need like physical resources. And if those physical resources get jammed up and the cost goes up, you're kind of at the mercy. Here, this is this is meteoric. This is insane. So we go. What is MicroStrategy? It is a software company that provides business intelligence, which is important, platforms, mobile software, oh, that's your phones, and cloud-based services. Oh, y'all know what the cloud is. It's that imaginary thing where all our data goes. Business intelligence helps organizations analyze data and make better decisions. Yes, good. MicroStrategy's BI, business intelligence platforms, includes AI technology, data visualization, and natural language to help users find information quickly. Mobile intelligence helps companies build, deploy, and maintain mobile apps, which is, again, your phone. Social intelligence helps business use social networks for marketing and e-commerce. Social networks, we know what those are. Facebook, we know what those are. Twitter, collegeclub.com. Yeah, shout out if you remember College Club. I bet you don't. Cloud combines MicroStrategy with third-party software, hardware, and services to develop BI, mobile, and social applications. It was founded in 1989 by Michael J. Saylor, Sanju Bansal, and Thomas Barr. The company is headed in Tysons Corner, Virginia, and ever since then has been getting the absolute shit kicked out of it in the stock market. Oh wait, it didn't say that, but that's what's been happening. It went from $150 to less than $1 a share, and now is on a huge meteoric rise. And let's be fair here. Let's talk real. Okay, let's talk real. If we go last 3 months, MicroStrategy is up 217%. Okay, 217%. Last 3 months. Let's remember those two things. Last 3 months. You're only up 78.22% with MSTY. Now, why? MSTY is trading options on MSTR. So its upside is capped. When MSTY has a huge day, that just means that when an MSTR has a huge day, that just means that MSTY is safe. And it's going to get its total It gets to keep the whole premium and its stock price went up. Now, if you hold the underlying assets, then that means that your portfolio value has gone up as well because your underlyings have gone up. But if you're doing synthetic calls, then you're only getting like the premium value in game. Okay. So this tells me, and I have to look it up, I could be wrong. This tells me that MSTY doesn't actually hold the underlyings. Or what do? Do they sell the underlyings after it clears? I don't know. I don't know because I know this. What hasn't happened is MSTY is not getting the benefit of the entire spike because they don't have the cost basis, they don't have the cost average. Like nothing is showing me the cost average. Like they're purely winning off premiums, okay? And they are winning off premiums. I'm not trying to dunk on Misty. Misty is blowing up. And if you were looking for dividends, let's scroll down. I bet Micro doesn't give dividends, right? We know Misty gives dividends. I bet your Micro does not do dividends, especially since they've just now started blowing up. No dividends. So MicroStrategy, huge growth stock. MSTY is going to pay you monthly for that growth. Okay. It loses some money every time it pays out. However, as we know, that doesn't really mean anything because all stocks go up and down. We have seen stocks pay a dividend and end up at a higher price point the same day. So people make too big of a deal about, oh, well, you're losing stock value when you pay a dividend. Technically, they're true. You lose it for a nanosecond, and then the market decides if they're driving the price back up or not. It's not a big deal. Like if the way they say it makes it sound like all dividend stocks will go to zero because every time it's paid out, you lose value. But we see all dividend stocks don't go to zero. A lot of them just keep going up. McDonald's pays a dividend. Do we expect it to go to zero because it loses value every time it pays? No. In fact, a lot of times McDonald's goes up on the same day that it pays out its dividend. So it calculates the loss. The stock price is calculated downward because of that payout. And then people go, woo, we're buying more McD's. And the price goes back up. People are confused about stocks. Let me explain this. Because I had a really smart guy tell me this once. And what he told me was wrong. Okay? The stock price reflects the value of the company. Now, on the surface, and for an IPO, that should all be true. What the stock price actually represents is the difference between buy orders and sell orders. We make the market. The buyers and sellers make the market. You can't tell me that the stock price went up 12 cents today because McDonald's made X amount more money today, because we don't know what they made today. We're not checking that daily. They do these quarterly reports, right? No, it went up 12 cents today because people bought more than sold, pushing the price up. That's what impacts your stock price. Now, the value of the company should be a consideration. If the company isn't that valuable, why are you paying so much for the stock? Stop it. You're paying on something that is bloated and overpriced. Okay? So people like try to get cute and super technical. Oh, well, I mean, the stock price is part of the valuation of the company. Well, no. We can take any stock, and if we all agree to do it together, and we can't because it's collusion, and it would be insider trading, stuff like that. There are laws against it, but you can artificially surge the price of stocks. Anytime a huge hedge fund comes in and puts $1 billion into a stock, guess what happens to that stock price? That stock price goes up. Why? Because they bought enough at a big enough amount that everybody's coming in going, oh, buy. It's a buy drive. And it pushes the price up. And we see this much more with rug pulls in crypto, right? Where stuff isn't as regulated yet, where stuff isn't regulated at all. You get enough people throwing money at a thing, the price goes up. So people have to stop acting like the stock price is some direct connection to the value of the company. It is not. And it hasn't been since they released the IPO and people started buying and selling. Okay, it's just that simple. I get it on the technical aspect, it's supposed to be true, but as soon as you put it out into the market, that is no longer true. And that is why, because and the market tries to do this. Hey, look, these guys are paying out money. That means they have less money. That means we're reducing the stock price because they have less value in their company. True. And then 10 minutes later, people have rushed in and bought. I don't know why they weren't buying before the dividend so they could catch it, but people rush in and buy, and the price goes up. So just understand the markets and the trends mean so much more on these swings than the actual value of the company. Not the value of the company. It is the buyers and sellers' perception of the value of the company. That is what it is. That is what it actually is. It's not the actual value. It is the perceived value by buyers and sellers. Okay, sorry about that little rant. For a long time, maybe MicroStrategy was horrible. Wasn't making profits, was in a lot of research and development, was putting in a lot of money, was not getting a lot of money back. Okay? Whatever it was, people stopped perceiving it to be a $150 stock. People sold that shit in mass, a lot, and it cratered. And now, it cratered to the point that it was below the level to be allowed to be on these trading platforms. Okay? I can go take you to OXLC right now, and when it dropped under $5, they were getting warnings. And when it dropped under $1, that you can't buy OXLC itself. OXLC had multiple funds, but Oxford Capital Lane, which I own, which was a 14% dividend, the stock is not supported on Robinhood, and it's back to 526. It's back to 526. It's paying a 19% yield, like right now. Okay, but we can't buy it on Robinhood because it was considered too unstable of a stock when it cratered and fell. Okay, and it's up from 340. I think this is back when it got booted. It's made it back to 828. They still haven't let OXLC back on. All right. So what I'm saying is that MicroStrategy did the same thing. MicroStrategy fell off a cliff. It probably wasn't listed. You couldn't get it on trading platforms anymore at that price. Now you could get it somewhere. I don't have access, penny stocks and whatnot, to an account where I could reach it, right? Where I could have access to it. But then it shot up like crazy. And then recently it super shot up. So MSTR max, something happened here, right? And then that kind of died down and people got cold on it again, right? Then something happened here, and the people got a little, I'm not sure, and boom. So, why is MicroStrategy blowing up? The one big reason the stock can continue to rally is due to its exposure to Bitcoin. Oh, so not because of all the cool technology. Huh. It's because they bought a crap ton of Bitcoin. And now Bitcoin is surging. So they didn't create a new platform. They didn't get boom, boom, boom. And now it's selling, and every business in the world wants to use their business information. That's not what happened. What happened is, and it's really this simple, crypto went up. So MicroStrategy went up because they hold a large stake of crypto. At an average acquisition price of almost $10 billion. At an average acquisition price of almost $10 billion, the firm was up more than $10 billion in profits. What is the MicroStrategy controversy? In other words, why did it go down? The complaint alleges that from the time of its initial public offering in June 1998 through March 2000, the securities are listed on the NASDAQ, materially overstated its revenues and earnings from the sales of software and information services. Okay, see, that's very bad. That's super bad. So that makes so much sense. Why is MicroStrategy buying so much Bitcoin? Firm initially used cash to make the purchases and has shifted to using the proceeds from an issuance and sell of stock. So they use people buying stock, flushing money into the company to buy Bitcoin, as well as convertible debt sales to leverage its buying power. So this is what it means. They used all the money that they had at that point in time to buy Bitcoin. It doesn't mean that's the only thing they spent on, right? They bought, they hired the people, they done this, they done that. Then they got an influx of cash, and they threw all of that influx into Bitcoin. So much so that then they had to leverage because they said, no, Bitcoin's going up. We need more of it. We will borrow money and we'll use other people's money because Bitcoin is going up. And their bet was right. Bitcoin has gone up. 2 billion Bitcoin, $2 billion Bitcoin buy. How? Okay, at what price? They bought 2 billion, which is 29,646 Bitcoin. Okay, cool. Price of Bitcoin times 93452. We won't even sweat the pennies. They're up 770 million on their Bitcoin purchase right now. They are up 770 million. They paid 2 billion with the B. They got 29,646 Bitcoins, and now they have 2.77 billion. That's 770 million. All right. Now, what does this mean? Does this mean that MicroStrategy is a good company? No, it does not. I'm not saying that it's not a good company. I'm saying that this $770 million unrealized gain doesn't mean that it's a good company. And remember, that gain is unrealized until they sell the Bitcoin, right? Remember that. You have to realize those things. So why is MSTR, why is MicroStrategy blowing up? Because MicroStrategy is directly connected to Bitcoin because they bought $2 billion worth of crypto. Okay? 2 billion. Can Bitcoin go down? Absolutely. However, remember, Elon Musk is in the government. Elon Musk is very crypto friendly. Donald Trump has stated, now we haven't seen it enacted, right? But I mean, guy's been president only for a couple of days, and they haven't even done the, the ushering out and the moving in. That comes in January. So, but he stated that the United States is going to buy 1 million Bitcoin. Not spend $1 million on Bitcoin. They're going to buy 1 million Bitcoin of an asset that will only ever have 21 million of it. Okay, so they're buying 1/21th of it. Also, do remember that America and China are 1 and 2 in nations that own Bitcoin. Now, America was not buying Bitcoin, but when we caught criminals and criminals had Bitcoin, we seized their Bitcoin. Okay, so we have the largest amount of Bitcoin of any country. If Bitcoin goes up, that benefits America because we are a large holder, the largest holder. Now, we're going to buy 1 million more on top of that? So Bitcoin going up is, in general terms, good for America. All right. If Bitcoin goes up, it's good for MicroStrategy. If Bitcoin goes up, because it is good for MicroStrategy, it is good for MSTY. MicroStrategy, you got to sell to get the money. You're going to make way more money, but you got to sell to make the money. If you had bought it earlier, I'm not saying to buy it now. It's at all-time highs. We don't. That's not a stock. All right. Whereas these guys are going to pay you monthly, and so here's what happens. Let's look at let's go to MSTR. Let's do it from the right one. Okay, so we're gonna sell a call. We got 100 shares, okay? And what we do is we say, okay, we're gonna be a little safe. We're gonna go 2 steps down. This thing fluctuates wildly, so $2.50 is not really that safe, okay? But we're gonna go 2 steps down. We're saying we have 100 shares, okay? And we're gonna sell this call, which means if the price goes down, you get to buy at this cheaper price. But to be able to buy that cheaper price, you got to pay me. Well, we're saying 422. So 26.45 times 100 shares. That's $2,645 generated right there. Okay? And then if on November the 22nd, 3 days from now, the price doesn't drop to 422.50, I keep the premium, I keep the stock. All right? That's how that works. Understand that. I keep the premium, I keep the stock. Boom. Big money. But they probably aren't operating on 100 shares of MSTR. They're working on much bigger numbers, right? So let's say they're working on 10,000. Okay, that suddenly becomes $264,000 generated off the premium. And as long as the stock goes up, they just made $264,000 and they've made capital gains, right? Now, I don't know if they hold the underlying. I don't know if Misty holds the MSTR underlying. I would believe that if they did, they'd be in much better shape. However, what could have happened is during the spikes, because we saw that MSTR went down, hit 170 and then went down, right? Well, when it went down, they got the premiums, but they also had to sell the shares. And now they had to buy the shares. Like if they didn't get back in and buy the shares fast enough, they're buying the shares at a higher price than they sold them at. Which wipes out, which if it's a big enough gap, can completely wipe out the premiums, right? I mean, you still get the premiums, but the loss you ate was far greater than the premiums sometimes, right? So that's what we're looking at. So this is how MSTY generates money. They sell call options. I wonder if they sell put options, because what puts do is puts will allow you to buy the shares. It kind of flips it, right? But you have to hold up the cash. So this is part of the will strategy, right? I have the shares, I sell calls. I sell calls until the price drops and they take my shares. Then I sell a put and the collateral is the cash to be able to buy, and I collect premiums until it hits the price. So if you're doing it right, you'd be like, no, I'm not going to sell the put at a higher price than my call was. I want to get it for cheaper, trying to buy it on the dip. And until I get the dip, I get the premiums. Oh, okay, good. The problem is if it never dips again. Also, the problem is if you bought way down here, you're not really getting any premium, are you? That's not a lot. We get up here, oh, okay, numbies be big. So if you bought back at 370, and then you finally get called on that stuff. Now you're kind of forced to buy in at a higher price, which can be very expensive, especially on stocks like this, right? So now you're at a new risk, because what if this doesn't stay at 430? Everything is great in options trading, as it is for almost everything in the stock market, as long as stuff keeps going up. A little sideways, but up. So the problem is maybe with MSTY, that when the price didn't go up, and then they get called, and then they had to buy back in at higher prices later, and then, shit just got expensive. Or they're doing synthetic calls, and I don't understand how synthetic really works, okay? I don't understand how synthetic works. I don't get how you're participating in this when you don't have the underlying shares. But I would think if you have the underlying shares, that MSTY, as amazing as it's doing, would get the benefit of the huge growth as well, right? I would think that it would be doing better than it is, and it is doing staggeringly great. But that's what I wanted to go over. This is not the end of business, because it's not the end of day or close of business, because it's not closed business yet, right? So I just wanted to go over this stupidly hot stock right now. Oh, but we're not done. I thought we were done. Some of it is spurred on by the $4.19, almost $4.20 dividend, and this thing pays a whopping dividend. Okay, you see this 128.94% dividend yield. That's insane. That's insane. The stock is 42.26, and they're going to give you 50 a year for holding it over the next 12. What? No one does that. That's insane. Well, it's not that no one does that now. Now we have a bevy of these type of option trading stocks that are designed to attempt to do this. Some do it better than others. Some pay less. Some retain that value, so the stock price goes up and the dividend gets paid. But normally they have lower dividends, still insanely high dividends, like 40%. Because when you're paying out big like this, you lose value. Money goes out. They hit you on the stock price. But because Bitcoin is going so wild, and they're making so much money, and they're paying out so much money, more people keep buying. So we're not even losing the stock value. And normally that would be through NAV erosion. And I'm not saying NAV erosion isn't happening. NAV erosion can absolutely be happening, but it's so hot that the market doesn't care. So we don't even see the NAV erosion, because all we're seeing is gains. We're catching big gains here. We're catching big gains here. And let me tell you, we see a decent average, $2 right here for this 3 months. Let's call it $2.25 over 4 months. But we're sandwiched here. They didn't pay in May. That's scary that they didn't pay in May. In April, they hit $4. In November, they hit $4. If these guys pull up and declare on their announcement date, right, that they're doing $4 again, that they're not doing some $2. $2 will be great. Don't get me wrong. I'm not poo-pooing on $2. What I'm trying to explain is, if they hit us with $4 again, people are going to notice. More people that aren't already in are going to notice. And they're going to buy it at the higher stock value. And what's that going to do? That's going to push the stock price up. Like this is not what is supposed to be happening. What's supposed to be happening is we're supposed to be getting this, and this is supposed to be going down, the stock share, but we're supposed to be getting more out of the dividends than the stock price is going down. That's how this is supposed to work. But because the company they're tied to is so heavily tied to Bitcoin, and because Bitcoin just shot up, and because it looks like this administration is going to be crypto and thus Bitcoin friendly, that Bitcoin should keep rising, well, we're not getting the original deal. We're getting huge dividends and huge, huge gains, capital gains. And that's ridiculous. I mean, I'm here for it. I'm benefiting. Yeah, people that are holding MSTY are loving this right now. People that are holding MSTR is loving this right now. Actually, if you're holding MSTR, I don't know how you haven't already sold. If you bought anything under like $100, if you bought when this thing was less than $1, I don't know how you had like, wow, okay, you got some intestinal fortitude. I don't. I get diamond hands, but sometimes at some point you got to make the unreal gains real. You got to realize them gains. So anybody holding it now that didn't buy in now, saying that it's going to go higher, well, I guess props to you. Bold strategy, Cotton, and I hope it works out for you. And I mean that seriously. I'm not like poo-pooing like, oh, these idiots. No, like, this could keep going up. This could hit $1,000 a share. This could become a blockbuster thing, okay? This could be stupidly huge on your MSTR, okay? It could. Because it's tied directly to $2 billion worth of Bitcoin and has already made 770 million, which is like 33% off that. What is the highest Bitcoin has ever been? What is the all-time high for Bitcoin? Oh, that's now. That is now. I thought it had been higher previously and cratered, and this was the new high. No, 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 no. This is we are there. This is the highest Bitcoin has ever been. Right now. So anything connected to Bitcoin. So what's the other one that we have? COIN. Coinbase. Well, what is Coinbase? Coinbase is a cryptocurrency exchange platform. So the more people that buy and sell, the more pennies they pluck, the more money they make. Well, when Bitcoin is blowing up as it is, it's hot, there's going to be more volume, more people buying, more people selling, right? More money for Coinbase. Indirectly, Coinbase goes up as Bitcoin goes up. Now we see that it's not quite going up like Bitcoin's going up, but Bitcoin's went up huge, and what's happened here, right? I'm willing to bet that if we look back, this would be the last time Bitcoin was nearly as high. Because Bitcoin, like the top 3 coins are 90% of the cryptocurrency market. That's just how it is. The top 3. Bitcoin, Ethereum, and then whoever fluctuates in and out of third. The top 10 are basically all the crypto. That's just how that goes. And that's the same thing with stocks, okay? So when Bitcoin goes up, when Ethereum goes up, it's good for Coinbase. But it's just good. When Bitcoin's going crazy and people are buying and selling Bitcoin, it is an igniter for Coinbase. So we have 2 stocks here that give us dividends, and these guys do the same thing. They sell options on coin. That's how they generate the premiums to pay us. So they're both associated with Bitcoin indirectly. And as we see, when the stock came out at $20, 28. Did it hit 30? 29.64, but it has cratered to 11, and now it's bouncing back up to 16. Now this is what we were supposed to see: initial excitement, people buying because the yields are high, but every time they pay us, we start catching drops because there a lot of these are 0 days to expiration, 0 DTE, which means that they're cycling premiums quickly. But for Coinbase, I don't think it's. I think only like Nasdaq and S&P do the 0 days, right? So these guys aren't operating 0 days, but if they're operating, weekly and monthly call offs. So when they take hits, it eats the NAV, right? When they lose, yeah, they got the premiums, but the losses are greater than the premiums, and you're not always going to hit. So you expect to see a general downward trend, and we've been seeing that. We were hoping that it wasn't this fast, but we've been seeing that. But it's been offset by these guys throwing so much money at us every month in the dividends. This is how it's supposed to look. But now, because these guys are connected to Bitcoin, they're shooting back up. Similar to MSTY, but they're not as directly connected to Bitcoin. So their gains are much lesser than MSTY's. But based on Bitcoin, Coney and Misty should both go up. Misty should go up at a much greater rate because it's more directly connected. But Coney should still go up because Coinbase should go up, which means that Coney's not going to bust so much on their options costs. But that was just it. We wanted to take a look. Probably not the deepest dive. It definitely wasn't the most technical guide. Why is it not the most technical guide? 2 reasons. 1, I'm not that technical. 2, I'm trying to get new people that don't have an understanding on these things into investing. Okay? Into investing. Look, man, I've been poor all my damn life. We don't get wealthy doing poor people things. And I get it. It's a struggle. That's why we do poor people things. We don't have the excess money to do rich people things. But if you can just get to $2,000, you can do your first rich person thing. What is that rich person thing? You can leverage. You can use other people's money to generate you income and wealth. That's the first rich person thing. And a lot of people don't realize it. You only need $2,000 to get there. Now I say only. Only is a lot. $2,000 is a lot of money. $2,000 is what I make every month. $2,000 is a month. Okay? A month of my income. I'm just very fortunate right now that my expenses are less than $1,000. Very lucky. So I've been able to get more money into the market quicker. Because remember, this account is only 2 months old, guys. All right? I started this account early October, probably October 1st. All right? This account is 2 months old, and I started it with $200. And then like 15 days later, I threw in another 20. And then on the 1st, I threw in a megaton. I threw in 900. And that hurt. Man, I'm still hurting. We're living on ramen, and we got weeks left. we got to get to here. So we got 10 days left before salvation comes and delivers me from this hell I'm living in of only ramen. It's not hell. I've done this numerous times in life because I had to. This was a choice this time. I put myself in this purgatory. But the 29th is my saving grace. And we got to see. Because if this goes back down to 1,100, I got to put another 900 in to reach that leverage, get access to that 1,000. And I'm kind of thinking I will. But I'm definitely thinking I don't want to. I would much rather this value just go up so I have to put less in to get to that 1,000. Right? So yes, I still need $900 invested to hit my 2,000. We're planning to hit the 2,000 over 4 months. Average $500 a month. The more I put in that second month, because the first month was only $220, the less I had to put in months 3 and 4. But if we can do the 2,000 in 3 months, that would be kind of cool. That would put me well ahead of schedule. But we don't have to go that crazy. I could do 700. If I'm allowed to only do 600, that allows me to live much more comfortably for a month. And then I get the access to the $1,000 margin. It would really be 2,000, but they would charge me interest on that second 1,000. We want to go interest free to start. I think we'll really make that decision when we get there. But yeah, we're going to go from a $2,000 account on the 29th instantly to a $3,000 account on the 29th. We're going to create $1,000 of value at no interest cost. That's rich people shit. That's not poor people shit. So that's what I'm trying to say. And that $1,000, you're going to collect the dividends off the stocks you buy with that 1,000. You're going to generate monthly income off other people's $1,000, and you can pay that $1,000 back whenever you want. You never have to pay it back as long as you have the account. Now, when you try to start selling off all your stocks and you try to close your account, yeah, you got to pay that 1,000 back. But that 1,000 can stay on your books at 0% interest forever. Now, the reason you would pay it back is for more security on your account in case of a downturn in the market, right? I'm not saying you keep the margin on the books, utilize it, and then prices are going up and there's not really good values. Okay, pay on your margin instead then, so that when prices go back down, you have that margin available. You can swoop back in, use other people's money to get you more money. That is how rich people do it. Rich people utilize other people's time and other people's money. We're going to utilize Robinhood's money to make me money. Okay? It's the only way we get out. We don't get out doing poor people things. That doesn't mean don't work. Absolutely work. Work hard. Do good at your job. Try to get the promotion. But we see that wages don't go up faster than inflation, generally speaking. But we look around and all the costs go up. The eggs go up. This goes up. That goes up. Everything's more expensive and I'm not getting paid more. And we feel that stress. We feel that drain. Okay? The only way out is rich people things. You don't become not poor doing poor people things. All right? Now, for some of us, myself included largely, even though I'm strapped for cash, I still buy a lot of dumb shit. I buy energy drinks I don't need. And we make excuses for that. Hey, man, I'm just trying to, I like to have a Monster every now and again. It makes me feel good. Shit, life is already pretty bad. Can't you just give a motherfucker a Monster and not bitch at me for it? And that is also true. Hey, man, we got to keep our mentals good. I get that. I completely understand. How many streaming platforms I have Crunchyroll, I have Hulu, I have Netflix. Look, I need to let some of that shit go. I could probably do it with just Netflix. Hell, I could probably do it with none of them. That would probably save me anywhere from 15 to 150 because, you can have a lot of these motherfuckers. Hulu can be expensive. Hulu's like, $30. Right? Stuff like that. I did not get NFL Sunday Ticket this year. I did not. So now we're just going to stream East that shit. So, that was a big savings for me. But because I wanted to watch my favorite football team, I got NFL Sunday Ticket last year. And that was expensive. Even though, that was my treat to myself. That was my broke boy treat. I wanted something nice. Well, you know what's nice? The dividends coming in every month. You know what's nice? Securing my retirement, my financial future. That's nice. That's a nice gift to give myself. So that's what we're working on. Again, at another point in life, right? So that's why I talk in as non-technical terms as I can. I want people that don't know anything about stocks to say, hey, as long as I follow some certain rules and don't get dumb, I can get returns, I can get gains, and over time that builds and that grows. Okay? Now, with the stocks, I will say this. I do prescribe for people on low investment budgets to start out rather risky. Because if we just buy really good stocks to give a 3% yield, our $100 is making us $3 a year. We need the help early on. We need more buying power than what we have. So I need high yields that are going to turn around and pay me good money so that my X dollars a month isn't the only buying power. I need my stocks to buy me stocks. I need my money to make me money. Now we can't go crazy because usually high yields are associated with high risk. That makes sense. We get that. High risk, high reward. So we need to get stabilizers built in. And when you start doing stabilizers, when you start doing stabilizers, depends on your risk avoidance or risk acceptance, right? On your risk level. For me, it's going to be somewhere between, I may put some stabilizers in with that $1,000 on the margin, or I may put stabilizers in when we hit $5,000 valuation, maybe even 10. I may kick the can down to 10. We're going to have to see how bull this market is. If these stocks are flying up that fast and I'm still getting these high yields, then we may ride this for the high yields more, especially if it's only one or two that are really blowing up. Because what I want to show you is YBTC's up. That's not up that much. It's not priced me out of buying it. Maxi, YMAG is up. It's not up that much. It hasn't priced me out. NVDY hasn't priced me out. Right? MSTY is getting to the point that I'm a little worried about buying more shares of MSTY. I'm more worried about Maxi. I had to look if Maxi has any underlyings on Bitcoin. Because MSTY might be that unicorn because it's tied to Bitcoin so much, right? MSTY might be that unicorn that you keep buying on the way up. Maxi may not have that Bitcoin connection, so I'm going to have to actually dive in and do some technical work and look at the underlying on Maxi and see how it's connected, because it's getting pricey. It's getting pricey. But really, like, only one stock currently is pricing itself out of me being able to buy it, and not really. I can still buy it. It's just putting a big dent in my cost average. So what you would do is you would stop buying this, you would put more money into the others, right? Because it's just getting too risky. And then when you look at your list and everything is priced out too much, oh, well, I need more options. Or, oh, well, I need to pay down my margin. You know, you utilize the money where it's going to get you a better return, a better gain, or better security in the case of paying off the zero interest leverage, the zero interest margin, right? That would give you more account security. And then you can use that 1,000 when prices go down, or when you find another good asset to bring into your portfolio. All right, but that's it. That's what I wanted to go over. We're trying to break the poor people cycle, and you don't get out of the poor people cycle by doing poor people things. We have to get to $2,000 so that we can leverage, so that we can use Robinhood's money to make us money, so that we can use Robinhood's time to make us money, right? Not our time, not our money. You got to start with your time. You got to start with your money, right? I put in $1,120. That's my money. I did that. But if I can get this value, I don't even have to put in 2,000. I just have to get this value to 2,000. It opens a whole new world. A whole new world where I could instantly double the size of my account if I chose to, right? Because again, I could leverage 2,000. I wouldn't leverage 2,000. That would be too risky. That would also have me paying interest. I don't want to pay interest right now. I would just take the 1,000 with no interest. So we got to stop doing poor people thing. We got to start doing rich people thing. We got to find our ways to get to leverage. There may be other ways to do rich people things, but I know that I can get to this rich person thing at $2,000. If you got other rich people things that you can get to before $2,000, share it in the chat. Let me know. But this is the quickest one I know. I get $2,000 into a Robinhood account. I have access to other people's money. Other people's money buys me stock, and I benefit off that. All right? So that's how that works. That's how rich people get richer. So let's stop with the broke boy. Let's stop with the broke girl. Let's start doing rich people things. And I don't mean trying to buy a yacht and going to buy bottles at a club. That's dumb people things. All right? But that's it, guys. It's been real. It's been fun. This has been an exploration into why MSTY is blowing up. I hope we now have a better understanding. This is A Climb to One. It's signing off.